Hi everybody, Marco Carvalho here from businesscreditbuilders.org. Today's video, we're going to talk about how to use business credit to buy real estate. We're going to share with you the three major types of business credit to help you whether you're going to buy and hold real estate or you're going to fix and flip real estate. So let's get started. When it comes to using business credit, you have to first get set up to acquire business credit for your company. If you're sole proprietorship right now or you're just getting started, I encourage you to incorporate your business. That's number one. So your initial steps here we're going to talk about is forming your entity, forming your business structure. You want to get an LLC or corporation, but you want to consult with the CPA or your tax planner to determine which structure would be ideal for your investment needs. Okay, so I encourage you to use myllcfast.com. If you're looking to incorporate pretty fast, you're looking for a service to do it for you, that'll take you to this website here, My LLC. And they offer incorporation services for your formation of your LLC for $99. They can do it real quick. They can even provide resident agent service. They can acquire your EIN for you, incorporate your business. So that's what I recommend for you. They're very affordable. So you go to myllcfast.com. Once you set up your structure, of course, the next step is getting your employer identification number. Now, if you use a service like My LLC, they can acquire your EIN for you. If not, you can apply for one on your own. When it comes to getting your EIN, you're going to go to the IRS here website and you can apply for your EIN number right here. So they do have lots of helpful information on your getting your employer identification number. And what's important about your EIN is the fact that this is going to be used when it comes to creating your company's credit file. It's going to be used for filing your tax returns. It's an identifier for your business. If you already have an EIN, you're already incorporated, and you want to start using business credit or building business credit for your company, and you've already have these things in place, you want to make sure that your EIN document, your CP 575 right here, this letter, has your current address, it has your current information accurate. If not, you want to make sure you correct that. So you can call this specialty line right here and request them to update your address, and they can fax over to you a new EIN letter. Why is it important for you to have this document? Because when it comes to applying for credit for your business, whether it's a business credit card or whether it's a line of credit at a bank, they may request this particular document. Okay, so you want to have this on hand. So once you have your employer identification number, obviously you have your business address set up, your dedicated business phone number for your business, a dedicated business email address. Next, obviously, you want to set up your business bank account. This is very, very important when it comes to getting credit ready for your business. You want to have all these things in place. Selecting your business bank account where you're going to do business is very important. There's major banks out there. There's regional banks. There's state banks. There's credit unions. There's community banks. I love credit unions and community banks. They're much more flexible. They're more personable. But you may already have your bank account with, let's say, a major bank like Bank of America or Wells Fargo. That's fine. But once you have your business bank account set up, the next thing is you're going to want to get your DUNS number for your business. So these are what I call the initial steps. This is getting your company credit ready. So how do you get a DUNS number? Once you have your corporation or your LLC or EIN, you have everything in place, you're going to go to the DNB website right here. Now, they give you lots of free information here, and they give you some options to get your DUNS number. There's a free option where it takes them 30 days to issue your DUNS number, and you can do it right free on their website right here, nothing difficult. You can basically click on this to choose your DUNS number, and then basically they're going to want to look you up first to make sure your company doesn't already have a DUNS number. If it does, then you want to also manage your DUNS number to make sure that the information is correct. So one option that you do have is, let's say you want to get your number fast, you can expedite it right here and click this, and they charge you $229, and they can issue your DUNS number within a matter of days. So that's one option for you where you can actually pay to get an expedited DUNS number issued really, really quick. And that's completely optional for you. It's not something that I recommend. If you want to go the free option, that's fine. Once you have your DUNS number issued, now you're ready. You're ready to start getting credit for your business in the company's name. I'm going to share with you, obviously, just stay with me here because I'm going to share with you the top 3 types of business credit that you can use to buy real estate or fix and flip your property. So Once you've done these foundational steps, now you want to build your business credit. So there's what we call business credit reporting agencies. You know, you have your personal credit, you have major credit, consumer credit reporting agencies like Equifax, and there's Experian, and there's TransUnion. Those are the consumer credit reporting agencies. On the business side, there are business credit reporting agencies that banks, credit card issuers, lenders, equipment finance companies, etc. They pull data, they pull a business credit report on your company with a business credit bureau to see how creditworthy your business is, to what type of credit report your company has. So as a business, if you don't have a credit file, if you don't have a report established with a business credit bureau that a lender pulls from, to them, you're non-existent as far as having a credit history as a business. That's why they're going to rely more on your personal credit. They're going to request much more documentation because there's no way for them to assess your company. How is your company managing its credit? How is your company's debt ratio with all the other credit cards that you have or obligations, etc.? Is there any UCC filings on the company? So that's why it's important for you to be proactive and start building up your company's credit. So these major business credit reporting agencies are Dun & Bradstreet, Experian, Commercial, Equifax Business, and Credit Safe. How do you get established with these agencies? How do you start building up your company's credit file? One of the easiest ways for you as a real estate investor is, of course, getting some net 30 accounts with vendors and suppliers. And this is the type of credit you can get that majority of them don't require even a personal credit check. They don't require a personal guarantee. It's very, very simple. These are easy ways for you to at least start getting some positive trade lines reporting to some of these major business credit reporting agencies. We recommend for you to at least get 4 to 5 or more of these types of accounts. And then also is your utility accounts and business services. These are things that you can have ongoing reporting on your business credit reports, like your mobile phone usage, your utility accounts, your cable services that you use for business, your internet service, even in your insurance payments. So we cover this in detail on how to get these vendor accounts. We actually list our top 5 vendors that you can get with no personal credit check. So check this video right here, how to build business credit in 30 days. That also covers how to add your utility accounts to your business credit report. So that's something I really highly recommend for you as a real estate investor. If you want to build business credit, you have to build that credit file. Why? Because it's going to help you in these next couple of sources we're going to talk about, which is business credit cards. Now you'll see this little house here. This applies to you as a real estate investor. If you're looking to buy real estate or you're looking for business credit cards you can use for your closing costs, soft costs, or even need down payment for real estate, then business credit cards are going to be one of your best tools that you can use in your arsenal. So that's number one. When it comes to using business credit to buy real estate. Number 2 is store credit cards for business. These we're going to share with you these in depth, these 3 highlights here in this video. So store credit cards for business, that's like your major retailers that provide credit that you can use for rehabbing properties, buying materials like sinks, appliances, paint, etc. If you're looking to fix and flip properties or renovate a property and you're going to hold on to it. Then there's obviously traditional business lines of credit. So those are the 3 major types of credit we're going to talk about for you as a real estate investor that you can use to buy and renovate properties. Let's break this down into more details. Business credit cards is number 1. Business credit cards, you can get 0% APR on purchases anywhere from 6 to 18 months. Depending on the type of business credit card you actually apply for. There's plenty of business credit cards out there. They're going to want to check your personal credit and provide a personal guarantee. Now, why are business credit cards so popular is because they don't require financials, no tax returns. You can be a brand new formed company and with no revenues at all. But if you have good, strong personal credit, then the bank is going to issue your business a business credit card that you can use. Now, many of these business credit cards come with 0% offers on purchases. So if you're trying to renovate and you need to pay some expenses for your real estate investing, then that's a great strategy right there. This helps you separate your personal and business expenses. Business credit cards are a great tool you can use for down payments. I'm going to share with you how you can do that. Closing costs, soft costs, you can use it for renovation costs. You can use it for your daily business expenses as a real estate investor. And of course, is when you get multiple business credit cards, guess what that's doing? these business credit cards you get issued are reporting to the business credit reporting agency. So this is helping you build up your company's business credit report. So why do I talk about net 30 vendors and getting utilities reporting and at the same time get business credit cards? Because that's going to help you as a business establish a diversity of credit on your company's credit file. Because remember, net 30, net 60 accounts show how your company manages short-term credit. When you get business credit cards revolving, that shows how your business is managing revolving credit. So that's why it's important for you to build up a diversity of credit on your company's credit file. Just like as an individual, you have your personal credit. That's why it's good to have like an installment loan on your personal credit. It's good to have credit cards. Maybe you want to also have an auto loan on your credit. So that shows that you as an individual can manage different types of credit. Same thing with your business. Okay, so with business credit cards, I want to talk about an example here with using a renovation. Let's say you have a renovation project that you need $20,000 in renovation costs. And you acquire this Business Advantage Bank of America card. And currently they're offering a 0% APR for 9 billing cycles when you acquire this card. And this is an example. Let's say you get approved for a $30,000 credit limit with Bank of America. What you're going to do with that is you're going to put that $20,000 in renovations on this particular card, whether you're buying all the materials, you're paying the contractor using that card, etc. But that's your $20,000. That $20,000 balance is now at 0% APR for 9 billing cycles. So typically with fix and flips properties, it's 3 to 6 months before you actually fix and flip it. So you're within that 9 billing cycle. So you get that $20,000 in renovation costs interest free. And then when you flip your property, obviously you go back and pay off this card, and now you have the credit available again. And of course, in 6 months, you can request a credit limit increase with this particular card and scale your access to even more credit. But what's also exciting about this is your servicing of this debt. When you put that $20,000 on this Bank of America credit card, what's going to be your payment while you're rehabbing your property? So during that 3 to 6 months when you're rehabbing this property, you now have a $20,000 balance on this business credit card. But because it's 0% APR for 9 billing cycles, you're only paying 1% of your debt. So the servicing of the debt is going to cost you $200 a month, which 100% of that $200 is going to paying down your principal because there's no interest on this card. Okay, so it's a very easy type of debt to service, but you always want to have an exit strategy when it comes to using business credit cards, because as you know, once that 0% period's over, then your high interest, it could be 90%, 22%, etc. That's when that kicks in. So you want to have an exit strategy. If you're doing a fix and flip, no problem. But if you're doing a buy and hold by pulling cash out of a credit card, which we're going to talk about next, you want to make sure that the cash flow you have from buying that buy and hold strategy is going to allow you to pay on this credit card, pay it down, or let's say you're doing the BRRRR method and refinance the property, and when you pull cash out, then you can pay off your card. So you just want to make sure you have the right exit strategy when you're using a business credit card for your real estate investing. But with this particular example, because this was a 0% APR for 9 billing cycles, Bank of America also offered you cash back and a statement credit. So for using $20,000, you only need to spend $3,000 the first 3 months, and you get a $300 statement credit. And in this example, you're getting 1% cash back on the money you spent, so $200. So you also got $500 back. So think about this: $20,000 to renovate that property, no interest. You get $500 back. You fix and flip your property, make your profit, pay the card back, and you're good to go. So I know this is a perfect example. This is just an example. Let's talk about number 2. What if you need the cash from business credit card to actually, you need it for cash to close. You need it for down payment. You need it for credit, and you have a lender, let's say, but you need to come up with that additional down payment money. There's a strategy for you to pull cash from your business credit cards for your real estate investment. Let's say in the same example, you have a $30,000 business credit card from Bank of America, 0% APR for 9 billing cycles. Well, there's a third-party provider called Melio. You could go to paybusinessexpenses.com. It's free to sign up with this. And what this provider does is they allow you to use a credit card, and they pay your recipient in cash, whether it's via wire transfer, ACH deposit, or check. Okay, and that transaction with the credit card company is treated as a purchase. So you still benefit from that 0% APR for 9 billing cycles, even though you're using a third-party provider, which is a $20,000 purchase in this example, but that $20,000 is being sent to the title company at closing, all right, through their escrow account. So you have to make sure you time this properly. I know I'm simplifying this, but this is a great strategy, very popular strategy. So let me kind of break this down for you. You have a $30,000 credit card. You sign up for Melio. You add the card in there. You put the recipient, the title company's information in there, receive payment. You put the card details in there. They charge $20,000, all right, and they charge a 2.9% fee currently. That's what their rate. So they're going to charge you $580 on that credit card on top of your $20,000. So what's going to happen is $20,000 is sent to the title company, and then $580 is what the fee of Melio gets. So now you're going to have a $20,580 balance on that credit card, but you have that $20,580 at 0% for 9 billing cycles. Now, keep in mind, you still get that $300 statement credit. You're getting the 1% cash back, like I mentioned earlier. So you're getting $500 back. So technically, this only costs you $80 to do this transaction. All right, so this is really, really powerful. So let me kind of share with you real quick. With Melio, you just go to their website. If you go to paybusinessexpenses.com, that takes you right here. It's really simple. You just click Start Now to sign up, and you're good to go. There's a challenge for some of you who actually need the cash deposited into your own business account. Let's say you need to season some funds. Well, Melio doesn't allow you to do that. They only allow you to use this service to pay recipients like vendors, contractors, it could be title companies, etc. But if you need the own funds deposited, you'll need to pull cash out, in this example, into your own company's account. We do offer a cash liquidation service that allows you to do that. So if you want to get information on that, just go to our website, businesscreditbuilders.org, and just fill out the contact form, and in the comments just put interested in cash liquidation, and then we'll schedule a call with you to go over how that particular service works. Before you apply for some business credit cards, first recommend for you is to check your credit. You got to know where you stand, know where your FICO scores are at. You can get a free report at annualcreditreport.com, but we have a relationship with ScoreIQ where you go to knowmycredit.org. You can get all 3 of your FICO scores and your full reports for $1 for 7 days. And then they charge $29 a month to consistently monitor and check your credit anytime you want. I do encourage you to have that service, because for you, if you're looking for credit and you're applying, you always want to know where you stand. That way you know you have a greater chance of approval or not. You can be aware of any dings on your credit, etc. But when it comes to business credit cards, you want to be at the 680 or higher FICO score range. Okay, but here's real quick the website. This will take you to our partner site with ScoreIQ. So you go to knowmycredit.org. That'll take you right here, and you can get this promo. 7 days for $1 for all 3 reports. Once you know where your credit stands, I want to also let you know is what to expect when it comes to getting approved for business credit cards. As a startup, or even if you're an existing company, it's all about comparable credit. Banks will look, when it looks at your personal credit, they're going to see how high are your personal credit card limits on your primary credit cards. Non-authorized user accounts are going to want to know how high are your credit limits. So you want to have ideally 5,000 or higher credit limits. You want to have at least 2 years or more of credit card history with your card issuers, any inquiries, as well as newly opened accounts. One of the things I want to emphasize here is if you're going to do this on your own, make sure you're very strategic in where you apply. So what we offer here is a business credit card funding option that we do all this work for you. So if you're looking to maximize your access to business credit cards, you have 680 or higher credit scores, and you have decent credit, what I want to encourage you to do is don't go apply for a couple cards on your own and then come to us to see if we can get you more, because most times it's too late. There's either too many inquiries or you have too much activity going on in your credit, and we really can't help you at that point. With this service, we can acquire up to $175,000 in unsecured business credit cards for your real estate business, 0% introductory APR up to 18 months on purchases, minimum 680 credit scores. These don't report to your personal credit, so whatever debt you carry on your business credit cards, none of it shows up on your personal credit. This helps you also build relationships with the banks for your business. And then also, this is a fast funding program. We can acquire these business credit cards to you in 14 to 20 days, and we're done. It's not going to take 6 months, not going to take a year that you have to wait. We're getting all these cards for you, and typically it's about 3 to 4 cards per funding round, and that's it. We're not getting you 10, 15 cards. It's 3 to 4 cards, totaling up to 175,000 unsecured business credit cards. So to pre-qualify now for this particular program, you're going to go to businesscreditbuilders.org, this is our website, and you're just going to click on this pre-qualify tab right here, and you're going to fill out this pre-qualification form, and you're going to upload a recent copy of your credit report right here. Now, don't send in a copy of your credit scores. We need to see a full credit report in PDF format. All right, it can't be a JPEG file. It has to be a PDF format where it shows each of your credit cards' credit limits, your individual payment history. That allows us to do a full assessment, and that way in 24 to 48 hours we call you back and we provide you a funding projection. So what I'd like to do now is talk to you about number 2 types of business credit for buying real estate or using it for renovations, etc. is store credit cards for business. This is really, really powerful because in addition to business credit cards, you can, like I said, you can use business credit cards for all those different types of expenses, whether it's soft costs, whether it's down payment on real estate, renovation costs, business expenses of running your real estate investing. But here now you have an opportunity to get access to credit for materials you need if you're doing renovations. Okay, so you'll see these are some of the major players out there like Home Depot, you have Lowe's, you have Menards, Floor and Decor, Tractor Supply. These all provide you commercial credit, all right, that you can use to renovate your properties. You can buy your materials you need. So this is another great source of credit. It's really, really popular. So how do you qualify for many of these types of store credit cards for business is having a good established business credit profile. Like I mentioned, if you get those net 30 accounts reporting your utilities, let's say you get a couple business credit cards, those are all now reporting your business credit reports. So when you apply for some of these types of store credit cards, they're going to check your business credit. Don't get these net 30 accounts, let's say, and you just get a couple business credit cards, then they're also going to want to weigh, they're going to weigh more heavily on the decision on your personal credit because they're going to require a personal credit check and a PG. Okay, so that's why it's important that we tell you to get these net 30 accounts, get all these other trade lines reporting on your business credit reports. That way, less emphasis can be played on your personal credit and more on your business credit with these types of store credit cards for business. Here's an example with Lowe's for Pros. They have a 0% interest for 60 days on new purchases, save 5% instantly in store or on their website. You pay the minimum monthly or you can pay them full. So they give you that nice flexibility. And they have a promo right now where you get 20% off in-store purchases when you apply in the store. So if you apply in the store, you get approved for this, you get 20% off. So that's pretty huge. If you have a project coming up, you need to buy all these supplies for your renovations, you can get this card. One strategy I want to talk about that's really, really important, which is right now, is leveraging your existing banking relationships, both for the business credit cards as well as these store credit cards for business, leveraging your business credit reports and scaling your access to credit. What does all that mean? Okay, so first and foremost is as you're establishing your business credit reports, it's important to know when you're applying for some of these credit sources, whether it's these store credit cards or business credit cards, is what bank is issuing this credit card or this store credit card. And which business credit bureau do they pull? Which personal credit bureau do they pull? So for example, on Menards commercial account, this is issued by Capital One. You already have a relationship with Capital One. Let's say you have a personal credit card with Capital One, or you have a savings account with Capital One, or you have some good history with Capital One. Then you're more likely to qualify for a Menards commercial account when you apply for Capital One because you're already in their system, okay, as a previous relationship. All right, so that's why it's important to know who's issuing these particular types of accounts. On the Home Depot commercial account, this is issued by Citibank, and as you know, Citibank is a more of it's a strict underwriting issuer compared to Capital One. All right, but if you, like I said, if you have a Citibank card as an individual or even a business Citibank card, then you're more likely to get approved for this commercial account issued by Citibank from Home Depot. Now, Lowe's for Pros. That's issued by Synchrony Bank. Synchrony Bank is a much more flexible bank when it comes to, they deal with a lot of store credit cards when it comes to Synchrony. That's what they specialize in, is store credit cards. So I'd like to say that's an easier type of credit card to get, where Lowe's also has an American Express Lowe's card, and that's issued by American Express. So if you're already in American Express, you already have an American Express card or relationship with them, then you're more likely to get that card approved with American Express, the Lowe's card. Okay, so does that make sense? I'm just telling you how you leverage these relationships. And then at Harbor Freight, this is issued by TreviPay. Okay, so you can Google TreviPay if you want to know a little bit more about that particular program. But this is what I'm talking about when it comes to being much more aware when you're applying for credit. What banks are you establishing relationships with? What other types of cards do they issue, etc. And that's where, like, our business credit card funding program, we take all that guesswork out of you, because that's what we do, is we maximize your scores, your what type of business, how long you've been in business, and we maximize and place you with the specific bank, the specific card that's going to give you the highest approval, the best terms, and the best offer. Let's talk about number 3. This is the third type of business credit you can use to buy real estate and renovate your properties, etc., is actual business lines of credit, traditional business lines of credit. This particular example I'm going to share with you is PNC Bank, because they offer an unsecured business line of credit as well as a secured business line of credit. This is one of the most popular things that are requested of us, is people coming to us say, I would like to have an actual business line of credit. I don't want a credit card, I want an actual line of credit. But remember, there's much more involved in getting a line of credit compared to a credit card. Credit cards are much easier because they're stated income. There's no financials, there's no bank statements or anything like that. You can even be a brand new startup and get a nice revolving credit line on a business credit card. Whereas on a business line of credit, most banks like to see you 2 years in business. They're going to most likely look at your tax returns. Obviously, they're going to look at your financials, etc. But in PNC, they offer a minimum line of $20,000, $100,000 max line, and they also give you the opportunity to secure your line of credit. So you're more likely to get the secured line, but with this particular example, you can only use non-real estate business assets to secure your line of credit. Here's just a real quick breakdown. I don't need to read everything on here. You can check a look at what they offer. But when it comes to PNC Bank, let me just share with you what their criteria is to approve you for a line of credit. This is their evaluation guidelines. As stated on their website, here's the link right here, what their lending guide is, what they're going to look at if they want to approve you for a line of credit. They're going to look at your personal credit history of you or 20% of the owners. So if you have multiple owners that own more than 20%, they want to look at both of your credit. Business credit history, they're going to check your business credit reports. Like I said, if you don't have a business credit report or credit file status at all, that's a negative on you, right? That's why it's important to build up your business credit. They're looking at how many years you've been in business. So if you're over 2 years in business, that's obviously better. They're going to look at your business debt service coverage and your personal debt to income ratio. They're going to look at any relationship history you have with PNC. So when people come to us and they're looking for a traditional business line of credit, one of the most common questions, obviously our quick response is, did you apply with a bank you already have your banking relationship with for your business? Because that's the first place you want to go to apply for a business line of credit. The most common answer we get from people is, I did, but I got declined. Okay, well, that's not good. Why did you get declined? Well, because I don't have enough revenues, or my business is too new, etc. Okay, so if you're not getting approved with the bank that you currently have a relationship with, where they see all your revenues come in, they see your deposits, they see your average daily balance, okay, then it's going to be an uphill climb getting approved for a traditional business line of credit with a bank you have no relationship with. Okay, so these are things to keep in mind when it comes to applying for a business line of credit. Now, granted, there's other types of line of credit, like from alternative lenders that look at more revenue, but those are much more pricey types of lines of credit because they're short term. They're usually 6 months, 12 months, and they actually give you a factoring rate as opposed to an interest rate, which could be pretty expensive. But to take you back here to PNC, net worth of the owners, they're going to look at the type of industry you're involved in and your collateral. Do you have any collateral, whether it's on the business or as an individual? Okay, so these are things that they're going to look at for a traditional business line of credit. Now, as you start acquiring real estate properties, there's other types of ways for you to access credit. Now, when we talk about the investment property lines of credit, the most popular is a HELOC. Obviously, if you own a home and you have a good amount of equity in your home, you can get a home equity line of credit. A lot of people are not comfortable using their own home, their own line of credit, because it's risky to invest in real estate. Okay, so if you're not comfortable with a HELOC, remember, as you start acquiring properties that you own and you build nice equity, like 40% or more in equity, then you could go to other credit products like single investment property lines of credit, where they allow you to tap into equity. It's like a HELOC, but now you have a line of credit off your investment property. And then there's portfolio lines of credit. If you have multiple investment properties and you have equity across the board on all of them, then you can have a portfolio line of credit. And then once you get into, if you get a bigger portfolio, for those of you who might have like an office building, or you might have multiple commercial properties, that's where you could type into that type of equity in those commercial properties that you own. Now, the advanced one, of course, is acquisition lines of credit. And what that means is getting that type of line of credit is when you have many types of investments, you have a solid track record, but you don't necessarily have lots of equity in all these properties, but you have a lot of properties that are worth a good amount. That's where acquisition line of credit can come in. It's not so much based on equity. So this is kind of a breakdown. Just shared with you business credit cards. I shared with you business lines of credit and store credit cards for business. And this is just kind of I want to share with you a little bit of how you can scale once you start acquiring more properties and investing. So if you found this video helpful, give us a thumbs up, click subscribe, that way you're always notified, and check out our website out at businesscreditbuilders.org. So with that, make it a great day. We'll talk to you real soon.